Still to come on the program World Insight. Severely hit by high costs from tariffs, how are industries coping with an escalating trade war? We will ask our panelists about the U.S. economy and its potential right after this break. Welcome back. You're still watching World Insight. I'm Tian Wei. The program is coming to you Monday to Friday on CGTN. U.S. side has slapped tariffs on imports from a range of trading partners, including China, the European Union, Canada, and Mexico, prompting retaliation against U.S. exports. Tit-for-tat tariffs on U.S. products are having a profound impact on corporate America, especially hitting businesses and farmers, some say. President Trump says trade wars are easy to win, but who is really winning? That, of course, is a debate taking place both inside the United States and beyond. Here is the story.
Trump's trade policies were meant to protect U.S. domestic businesses, but it seems they're likely to be the worst affected. Companies and industries are already starting to feel the pinch. The tariffs are increasing input costs for the companies that import goods from China, making their operations less viable. The manufacturing activity in the U.S. slowed to the 6-month low in October. According to the data provided by the trading group, the Institute of Supply Management, the National Factory Index dropped over 2 percentage points to just above 57 in October. In a huge blow to Trump, General Motors on Monday announced plans to close 2 manufacturing plants in the U.S., axing over 14,000 jobs. The company did not specifically mention tariffs, but in June, GM warned that trade tariffs could lead to job losses and lower wages. U.S. industry figures are an aberration. Analysts believe that Trump's leverage game against China seems to be backfiring.
So far, that hasn't turned out to be the case.
One of the most striking consequences of the trade war is its impact on U.S. farmers. According to the Minneapolis Star-Tribune newspaper, over 80 farms have filed for bankruptcy in 5 U.S. states in the upper Midwest region. Corn, soybeans, milk, and beef producers are the worst affected due to the steep fall in global demand. China last year accounted for about 60% of the total U.S. soybean exports. Since Trump imposed sweeping tariffs prompting China to retaliate, prices for soybeans have plummeted to a 10-year low. According to data analyzed by Louisiana State University, in 2018, almost 15% of 2018 soybean produced in Louisiana is plowed under or is too damaged to sell. A rising trade deficit with China was at the core of Trump's trade war, but the latest numbers prove that raising duties on goods isn't helping. In September, the U.S. trade deficit with China reached a new high of over $34 billion, a 13% increase compared to last year. The Chinese side says it hopes that U.S. will realize the basic fact of an interconnected world. There are no winners in a trade war.
So what's the economic cost of trade tensions? Let's ask our academic experts. Still with us in Washington, D.C., once again, Mary Lovely, a non-resident senior fellow at the Peterson Institute. In the United States, we also have Steve Kyle, who is a professor of economics at Cornell University. Welcome, Professor. And in Southampton, the UK, we invited Mike Baskin, a professor at the University of Southampton. Welcome to all of you. This is not a debate about who will blink first when it comes to a trade war, not at all, but rather let's take a look at the numbers and take a look at the different sides of the economy. Professor Kyle, since you are joining the debate new, help us to understand, will the American businesses, particularly multinationals, be able to survive well the current atmosphere?
Well, it really depends which businesses you look at.
Exactly.
Overall, compared to the size of the U.S. economy, the costs are not huge. There are estimates out there of on the order of $120 to $130 per family per year, averaged over the whole country. But that really masks underlying pain in particular sectors and particular industries. Certainly there are some industries with a healthy enough profit margin that they can absorb at least some of the increased costs, but there are others that are in deep trouble. I'm glad that I don't farm soybeans right now, just to take one example, and I'm glad that I don't run a business that buys aluminum and steel. If you're in that kind of a position, it can be serious trouble.
Right. However, Professor Lovely, I mean, the current administration is trying to provide subsidies to these farmers who are doing soybeans, and also try to provide what they consider as good conditions for the steel industry. Of course, one could argue, how long will this last? That's another question. And what's going to happen after that? What do you think? Will political, measures and policies driven the economy, some of the sectors, be able to be stable?
Well, I mean, you're asking about the economic and the politics. On the political side, I think, we saw many of the same districts who voted for President Trump return Republican congressmen to Congress. Many farmers are staying with Trump, even though they themselves are feeling a lot of pain. I think it's really a matter of how long this lasts. The subsidy program for farmers is really just a stopgap. It's just a tiny Band-Aid on the wound. The longer this goes on, clearly the deeper that pain, and clearly the harder it is politically for President Trump to sustain this. So we're seeing not only multinationals are going to bear some of the costs, it's hitting also small and medium enterprises who buy things from China, as well as our farmers.
Right. Professor Kyle, we see that the numbers of the U.S. economy are doing quite well, one would argue, over the past few years. But on the other hand, you see also the Fed, as we mentioned earlier in our earlier round of debate, trying to adjust its policy, the interest rates, and also as a result and related to that, whether future tax cuts will be done and to what degree, by what time, how many times. So these are all profound economic questions that needs to be asked when you look at the real potential of the U.S. economy, particularly in the midterm, not just the next year, but rather in the next few years. Professor Kyle, your thought?
Well, it's certainly true that the U.S. economy has been doing well, and it's likely that we're nearing a peak of the business cycle in the next year or two, although no one can predict with any certainty. As for the effects of the tariffs themselves, if we look to the longer term, the intention is to promote replacement production in the United States in place of the imported goods. That, however, is itself questionable. If I were a factory owner or an owner of a business and were looking to locate a new factory, I certainly would not want to choose a country that is starting to engage in a trade war. I would want to pick somewhere else that I could freely export and import from and to. If you look at our own businesses, the Harley-Davidson motorcycle company, for example, moved production from the United States to another country for precisely that reason. So I worry about the long-run effects of this as well as the short run, whereas numerous commentators have said nobody is winning.
Right. Professor Lovely, I have to come back to you once again, too. I mean, you see one company after another. Harley-Davidson is one of them, General Motors, another one, and you also see now the latest news related to Apple. So one after another, what would these companies actually mean? And also the debate related to them mean for the future directions of the economic policy choices?
Well, you're asking questions that reflect the fact that we're moving into territory we haven't been in before. But, clearly it's time for the business community to send up some smoke signals that this is really hurting them. I believe it's also hurting factories in China. We're seeing U.S. buyers trying to squeeze Chinese suppliers. That hurts their margins. It hurts their ability to hire workers. So again, we see neither side gains. Where do we go from here? Well, we're hoping that this weekend we get the beginning of a détente and we get some relief from these tariffs. and begin to return to the table and talk about expanding market access and expanding the interconnectedness of the two economies, which has been beneficial to both sides.
Just adding to the complication there, you know, if we take a look at some of the consumer market, there was certainly something very different now as being reported. There was something missing at the luxury jewelry stores, Tiffany & Co. in recent months. For example, Chinese tourists have been rather going down the number, and the revenue has been suffering as a result of this, if you take a look at the numbers over there on the screen. And this is certainly just one of those examples, and Chinese consumers are certainly trying to, in their own way, make their voices heard as well. So, Professor Bastian, you are coming from Europe. Of course, Europe has its own challenges, to say the least, for now. But certainly, it's also one of the huge block of economies, that's likely to be influenced as a result of this trade dispute going on between the two largest economies in the world, China and the United States. Professor Bastian.
Well, most definitely. I think I echo the sentiments that have been made, that there is really no winners, and I think those losers don't just include China and the US, they include Europe, which has its own pressures as well. I think what I will say is that at the summit, the upcoming G20 summit, let's be positive, and let's hope that there is some sort of meeting, some sort of public handshake between Trump and President Xi Jinping, and we start to move forward to positive rhetoric and move away from the nationalistic, isolationistic sort of rhetoric that has really come from the Americans, and the weekend can beckon in some sort of new dawn where we move forward.
Professor, from your perspective, what are some of the things that urgently needs to be handled right now, and how are you looking at the potential near-term and middle-term about the U.S. economy?
I think a lot of it hangs on the midterm elections.
Professor Bastian, please. Sorry.
Yeah, I think a lot of it hangs really on Trump, and Trump's facing up to whether or not his rhetoric, his sort of China bashing rhetoric, really still resonates with the American public. As the panelists have said, it's perhaps only a matter of time before even the farmers and some of the other members of the US electorate actually who voted for Trump do actually turn against him and realize that it really is economically damaging short-term and long-term. And in that situation, Trump, I think, will be forced to make a U-turn. So I think it really is up to the American public to show their discontent through the ballot box, and hopefully that will happen soon.
I see. In the earlier round of discussion, purely devoted to the bilateral relations, I asked every panelist about the common ground that the two sides could ever seek, if there is any. I would love to ask that question to you once again about that question, because it's very crucial. Professor Kyle, economically speaking, the field for the better potential of both economies, where could be the common ground, sir?
Well, I have absolutely no question that if you got a group of United States economists together with a group of Chinese economists, that they could readily come up with a deal that made both sides happier. Certainly in the previous presidential administration here, there were deals on cybersecurity. There was progress on talks about intellectual property rights. I have no doubt that there could be more progress made in those areas. But the president's current moves toward trade war are not based on any of those considerations. They're based, it would seem, on purely domestic political considerations. So I'm not a psychiatrist, nor am I a political scientist. So I think it is an open question whether Mr. Trump will be willing to come to some sort of a deal with China in the upcoming summit.
All right. And Professor Bastian as well, briefly, sir.
I think it's for the economists. I also think it's for the business community, the American captains of industry, Chinese business leaders. If they can somehow coalesce and put pressure in effect on Trump and how they are all suffering, and they have a single voice and promote liberalization of trade agreements, and you know, a U-turn in Trump's attitude, I think that's the way forward. So it's for the business communities to unite.
Final words, Professor Lovely, you said it already, but final words from you once again, very briefly, ma'am.
Well, I think we need to focus on the issue of technology transfer and intellectual property.
Okay.
I think there's still an enormous amount of good to be gained for the world by U.S. and China working together.
All right. Mary Lovely, Stephen Kyle, Mike Bastin. I hope the leaders from both sides are listening to our conversation, and certainly they're going to get some inspirations as well. Thank you so much for being with us. I really appreciate it.